Welcome to The Explainer. So, let's talk about the absolute frenzy around artificial intelligence. I mean, trillions of dollars are flooding in, companies are slapping AI on everything, and stock prices are just going through the roof. It kind of makes you wonder, right? Are we living in a massive AI bubble, and is it about to pop?
All right, here's how we're going to break this down. We'll start by looking back at history for some clues. Then, we'll get into the anatomy of the current hype. We'll ask if this time is really different, find the real core of what's happening, and, of course, explore what happens if or when it all pops.
So first up, history rhymes. To figure out where we're going, sometimes you've got to look back. And when you look at today's AI boom, wow, the parallels to the dot-com bubble are just uncanny. You really can't ignore them.
And that brings us to this great quote, often attributed to Mark Twain. It's the perfect way to think about this. We're not expecting an exact repeat of the 90s, but we're listening for those rhymes, those echoes, because they can tell us a lot about what's happening right now. Okay, check this out. Look at these two timelines side by side. You had the internet simmering for a while, and then bam, the Mosaic browser in '93 puts it in everyone's hands and the frenzy starts. Fast forward almost 30 years, AI is developing, and then bam, ChatGPT is released in 2022, and suddenly everyone is using it. It's the same pattern, a key moment of public access that just lights the fuse for an explosion of hype and money.
So, what was the big technical trigger this time around? Well, it wasn't just about the software. The real game changer was actually a piece of hardware, the GPU, or Graphics Processing Unit. Yeah, the same chips originally built to make video games look awesome. It turns out their ability to do a ton of calculations all at once, what's called parallel processing, was absolutely perfect for training AI models. The big aha moment was in 2012 with a model called AlexNet, which showed just how much faster this hardware could make everything.
And the result of that discovery? Absolutely mind-blowing. Just look at this number. NVIDIA, a company that was pretty much known for making gaming chips, saw its stock price explode by 400 times. Think about that. They went from a gaming company to a trillion-dollar behemoth, basically becoming the single most important engine of this entire AI revolution.
All right, so that hardware breakthrough really set the stage. Now let's dig into the anatomy of the hype itself. We're going to follow the money and the sheer momentum that's built up around AI.
I mean, just look at the speed we're talking about here. It took the internet 6 years to get to 100 million users. TikTok, which felt insanely fast, did it in 9 months. ChatGPT, just 2 months. 2! That kind of velocity is completely unprecedented, and it just poured gasoline on the fire for investors. The FOMO, the fear of missing out, became absolutely undeniable.
And that FOMO leads to some, let's say, interesting behavior. Remember the dot-com days? You could have a company that sold, pet food, and if you just added .com to the end of your name, your stock valuation would just go ballistic. It was that simple. Well, guess what? It's happening all over again. Today, the magic letters are A and I. It feels like every company on the planet is racing to stick AI next to their name. It's the exact same playbook, right? Signal to the market that you're on the cutting edge, even if the AI is just a tiny feature.
And oh boy, is there a price tag on this hype. We're talking over $200 billion in venture capital just poured into AI startups. You've got companies raising $1 billion with not much more than a cool-looking website and a promise. The sheer amount of cash flying around is staggering.
So, this leads to the million-dollar question. Or, I guess the $200 billion question. With all of this money pouring in and market caps soaring into the trillions, what are we actually getting for it? What's the real, measurable return?
And, well, here's the reality check. A recent report from MIT found that a whopping 95% of enterprise generative AI projects are delivering, wait for it, 0 measurable return on investment. Let that sink in. 95%. The hype is through the roof, but for the vast majority of companies trying to use this stuff, the actual value just hasn't shown up yet.
Okay, but let's pause for a second. Is it really fair to just call this .com 2.0? There's a strong argument to be made that actually this time is different, so let's explore that side of things.
And before we go further, let's just make sure we're on the same page. What even is an economic bubble? Simply put, it's when the price of something, like a stock, goes way, way beyond its real worth, fueled purely by hype and excitement instead of solid fundamentals.
And this is maybe the biggest difference. The dot-com bubble, that was all about unprofitable startups with shaky business models going public, funded by everyday retail investors like you and me.
Today's AI boom is totally different. It's being bankrolled by the Magnificent Seven, some of the most profitable companies in the history of the world. We're talking about huge, established giants and private venture capital. These guys can afford to burn billions on R&D for years and not even break a sweat.
So, if it's not a dot-com repeat, but there's clearly a ton of hype, what's really going on? This brings us to the core of the issue, a kind of middle ground between the two extremes.
You know, maybe the best explanation comes from Sam Altman, the CEO of OpenAI, a guy who's right in the middle of all this. He says that bubbles happen when smart people get overexcited about a kernel of truth, and that phrase is key.
So let's break that down. The kernel of truth is that AI is legit. It's a real, genuinely transformative technology. No one's really debating that. The bubble part, that's everything else. It's the insane expectations, the crazy timelines for when it'll change the world, and the idea that the return on investment is just around the corner. It's that massive disconnect between the very real potential and the current messy reality.
And that disconnect isn't just theoretical. It's bumping up against hard, physical limits. I'm talking about the insane amount of energy these things need. Data centers could literally double the world's electricity consumption soon, but our power grids are already stretched thin. Then there's the tech itself. It's still unstable. An update from a company like OpenAI can break thousands of apps overnight. And let's not forget the cost. The high price of quality training data and the expensive, complex development for these models create a massive barrier. Not just anyone can build one of these things. The hype is meeting the friction of the real world.
Which brings us to the big finale. Let's say the hype does cool off, that the speculative part of this bubble pops. What happens then? What does the world look like on the other side?
Once again, we can look to history for some clues, some warnings even. The poster child for dot-com excess was the absolutely disastrous AOL-Time Warner merger, a massive $180 billion deal that just imploded. It's hard not to look at that and then see Microsoft pouring billions and billions into OpenAI and think, that feels familiar. A huge, established company making a massive bet on the new, revolutionary, but still unproven thing.
But here's the most crucial lesson of all from the dot-com bust. After it popped, thousands of companies with bad ideas just vanished. Poof. But the internet itself didn't go away. The underlying technology was real. And out of all that wreckage, the companies with actual solid business models, Google, Amazon, you know the names, they survived and went on to define the next 20 years.
So maybe, just maybe, the question we should be asking isn't if this AI bubble is going to pop. Maybe the real question is, who's going to be left standing when the dust settles? And the answer might not be the company with the flashiest new chatbot. It might be the boring companies, the ones quietly doing the hard work of building the chips, the data centers, and the power grids, the actual foundation that this entire future is going to be built on.